Hey traders, happy Monday. The market is closed and I wanted to do a review of some economic data points coming up this week, as well as a review of last week's major movers. We basically had big hits. We'll see if they're one-hit wonders. In other words, the January effect has kicked in. Will there be a follow-through, specifically on the IPO plays that we've been tracking and trading for 2 months now in my live trading room, and wheat stocks as of a little bit before the first of the year. Platinum, palladium continues to move higher, and in particular, I think one will slow and the other will take off. And we're going to talk about oil and gas as well, since the commodity as well as the plays companies are in definitely a digestion mode, let's put it that way, until we get some definition around direction. But I have some feelings on that and I want to share that as well. I want to start off with a little warning that despite strength in the market, I can see clear case for consolidation and higher in the S&P and related indices, especially small caps. You know how I'm very excited about oversold quote-unquote value plays. Basically, left for dead, dash for trash, continues to percolate up off the bottom. Call it the January effect, but in short, we have lots of opportunities with oversold plays. We also have large caps that are continuing higher, Apple and Google. But what could put a crimp in that rally is potentially, put a crimp in the rally, is worries of 2002 repeat. In other words, SARS has broken out in China, and we're not quite sure how contained it really is. The president has come out, President Xi has said it is contained, but of course, how to contain germs. This is early, but we did have a sell-off in 2002 when the virus spread pretty quickly, and we had obviously a major panic, and it was over in Asia for good reason, because people were getting very sick and dying. So this, in many countries. So this is definitely a worry that's just percolated up over the weekend. One thing that might not have been high on the radar for market moving events this week, but we do have the extradition trial of Huawei's CFO begins in Canada. Interesting read I have on Twitter for the case against Huawei. We'll see if there's any retaliation. Right now, the dollar yuan is bouncing because it's hitting the 100-day as discussed. I don't think that has anything to do with the upcoming case, but it is very interesting. We've been kind of like targeting on a weekly the 100-week, this magenta line, where this pair trade obviously stopped going down and then rose, and with that the dollar will rise. The dollar is already today beating all other currency pairs, but this is definitely just, for me, a technical bounce. I'm not saying this is politically motivated, but I just wanted to put that on the radar, because as the dollar obviously moves higher, that puts pressure on potentially precious metals, gold and silver, but also oil. Right now, oil looks to want to bounce at least a little bit higher. I've got some intermarket analysis that's much better and crisper than this USO. We closed as with a tail doji. We'll see if we open and move up. I'm thinking we don't move very far before we continue to roll over, and I've got some, demand supply issues in this regard, not just technical analysis. Definitely hedge funds are starting to lighten up on their longs. They're still, however, long 7-1. So they're long for every 7 contracts for every 1 short, but that's a little bit, let's just say, feeding into my theory that they're going to lighten up a little bit more, and I'll show you a chart later on. Well, yes, we do have the impeachment trial that also begins tomorrow. And then, of course, if you're looking for economic data, I have a calendar on my website, Economic Calendar. So that'll give you some of the highlights that are coming up, everything, every country, or just most important. But in short, we definitely have a busy week for earnings. And I have also, and I will kind of put that in there. Retweeted what's coming up, and of course the biggies like Netflix, among others. There are many biggies coming up this week. American Express. I mean, you can definitely. We're going to talk about this in the trading room, but I wanted to highlight that current estimates right now for 2020 S&P earnings growth right now is expected to be 9.7%. Compared to 2019 growth, where we will find out actually in 2 weeks what it was for 2019, but not expected to be more than 0 to 1% for EPS growth. So it started out, by the way, for 2019 at 10%. We ended up at 0. That's a rarity, a big rarity. It shouldn't happen again this year, but I'm just making kind of the observation that there's a high bar of earnings growth expected, and is that already priced into the into our market? So I have to always err on the side of, I can see price action is bullish, but I also can see that sentiment is getting euphoric, and I can also see that none of my indicators have turned bearish for the S&P or the NASDAQ or a reversal on VIX, but we can have events, whether it be currency volatility, which right now has been at all-time lows and should start to percolate up, and that can put volatility back into the market. The SARS outbreak, we've had this, kind of knee-jerk reaction to sell stocks in the past. Again, to the point that it would hurt economic growth, travel, all that. The productivity, everything. So we're really not out of headline risk on lots of fronts. China, Iran, North Korea percolating up again. They want some attention over there. But right now we have earnings season, and that's the biggest focus. But we also have a few central bank decisions coming up. Bank of Japan started a 2-day meeting. Wednesday we've got Bank of Canada. We have, sorry, they're in here. Thursday we have the ECB. And then, of course, next week we have our own Fed. So we do have that with not a lot of expectations. I don't think our Fed will cut. There are a few priced into the market this year. I think that will be a disappointment personally, but we won't know until we get the minutes, and that's not until next week. So this week, we have Bank of Japan, Bank of Canada, and the ECB. We also have 58 S&P companies, including Texas Instruments and IBM and Netflix and healthcare companies like Johnson & Johnson, Procter & Gamble, Abbott. We got a lot of big earnings releases this week. Then we have Asia market closing for the Lunar New Year and celebrating the Year of the Rat. So they're going to be closed from Friday through the following Thursday. That's one solid week. We also have nat gas getting killed. All really, like, it's going to be free soon. Oil, a little bit stronger on possible supply disruptions, but my sentiment on this. I think we're actually going to, let me just get a little quick chart here if I can show it to you. Yeah. That we should potentially, this is crude, we have come down. Now we timed that. That was actually pretty cool. Since October, I had a thesis for long oil and gas. Then we had Iran, which was just a spike in potential, geopolitical risk and supply disruptions, which I always contend are not as strong as demand. So that was a great short when we had the Saudi Arabia drone attack. That was a great short when we had the Iran, what do you want to call it? Political instability. But now we've come down to this kind of juxtaposition of the 50 and 200 serving as support. I would not be surprised if we bounce into a trend line and then down to the next trend line. This is still a wedge that's forming, big picture. Not sure if we're going to go higher or lower right now. We got a few iterations, I think, to work through. But I definitely have a stronger feeling like we will have a mini bounce and then a drop, and we'll see what happens. The ratio that I do of crude to the SPX, which shows relational strength and weakness, is not really doing too much. It kind of went above, looked strong for that period while it was above, especially remember my post on December 4th, and that worked out extremely well. And then in the room, it was time, because I had, insider knowledge, meaning I have a really, really competent and very laser sharp focused oil trader who only trades oil, was very bearish, and it said the excess needed to be removed. And sure enough, we shorted it in the room, and we had a 4.5% drop in one morning in crude, and that was something you just had to be there for because it was very, very rapid. So anyway, that was this spike lower. I had help timing, and now we are, I would say, consolidating on the 200. All right, so good traders really, really, when they get a high confidence level, and they, feel like something's going to move, they like to kind of telegraph it. So my thing was the IPO market, and we're going to talk about that. This is something from November 16th I posted for clients, oversold IPOs as value plays, and then I updated this on January 13th. Now this was last Monday. I did a little video. I also made that public privately because we have 1 week in, and in the trading room it was unbelievable. The plays that just kept on giving, and the ones that I was not excited about, like Chewy and SFIX, and Work, WORK. I thought it, was like funny. It wasn't moving. Like Microsoft is major competition, and then sure enough, at the end of the week, Microsoft came out and has basically taken some market share away from Slack, and it dropped on that announcement. So, but lots of other plays have been doing extremely well. Case in point, you can see this watch list that I keep here, and just 1 week ago, this was only up 100%. Now it's up 152%. And in that video and in the trading room, I have been uber bullish on IPOs, specifically NEO, LK, SDC, Beyond. I still like Fitch. I still like Uber. I still like ZS. Oh my gosh, we played the pins perfectly and strongly. Crowd. So there have been some really strong plays, and I wanted to go over some of this to show why I was bullish, why not just IPOs as a sector rotation, but the particular price points. So that's a little bit of why I wanted to do this video live and send it out versus tons and tons of writing, because it just takes me too long. And I've already done a lot of analysis on this and talking about this, but it's rare that folks are going to go back. And you have full access, by the way, to the live trading room and any and all posts. This is just what I wanted to do as a review. So Beyond, let's start there. All right, so Beyond was absolutely selling was being absorbed. Let's put it that way. They were coming in, and I said, as soon as this gets above 74, I should say stays above 74, gets inside the Keltner channel, it should run to the 10-week, should run to the 21. These really haven't converged very tightly, so that means it's going to be volatile until this can get and stay above the 10 and 21 weeks. But long story short, there is basically this pocket all the way up to 140, which is where it strongly broke out, stayed above, and then when it failed decisively. So many weeks down here, flatlined, and then explosive. This was very exciting because we timed this very well back on January 7th. It was a breakout from basically 75 to 135. It has come back, obviously, solid price target, profit taking, but it's still at the 3-day moving average. And I said, as long as it can stay above, because right now this 3 and 8 are supported by the 100-day. So they're all confused because this was so explosive. This is the 55 in red down here. So in short, this could pull back all the way to 95, but from 75, it's incredibly bullish. So the volatility in this is way hold your nose type of play, or it's day trading. Very tough, honestly, with this volatility. to play options as a swing trade, but this was one point of IPO reversal. We caught it very well. CRWD, which is the CrowdStrike. My thesis was this was doing the same kind of thing, doji on weekly, and it was going to get and stay above 52, and then the next price target was the 21 week, stopped on a dime. Next week it opened up, very, very nice on a daily. It's just a 45-degree angle up to the right. Very, very nice continuation play. This is a new issue, so it doesn't have so much data. It is looking like a nice, clean double bottom with a break higher into 70 would not surprise. This, to me, even though they had, I think we had one day where there was a raise. They did a big raise, and it came down a little bit, but hardly enough to worry about, and stayed above the 55. It has not even tagged the 21. It likely will, wouldn't be surprised. It probably stays above 60. It can get volatile after it's run so much. But CrowdStrike still looks great. I'm going alphabetical order, by the way. CVET, and by the way, CrowdStrike was recommended on Wednesday, January 8th, once it got above the 55. So I wasn't in it here. I just suggested it. Once it got above the 55, this was a really nice play to continue higher into basically 65 and then 70, and we'll see how it does, but bullish. CVET suggested this on, well, actually, I've been watching this for a few weeks. You'll notice I just added it, however, on the 13th. So it was suggested on the 13th as an IPO that hadn't run. Great bottom fishing chart and story. I like this story. It has run $13.50 to $15, but I don't think that's very much. And the $18 price target I have to start with 24 in time. I think it's going to head all the way back up here. So CVET is highlighted in the post I'm going to send out because I think that is has a lot of room to move. I still think, as I mentioned, CrowdStrike is bullish, and I still think Beyond is bullish. All right. Dropbox, Dropbox to me still has not triggered, so I don't have it highlighted. Yes, it has a lot of insider buying and unusual option activity. It's in the right sector, but it hasn't closed above the 10-week, so I'm not interested until it does. Fitch, however, strong recommendation back on 12/30. I liked this one a lot. And as an IPO, it had not run yet until just this week. Great bottom fishing chart. And I like the story, meaning the fundamentals, the growth potential. It has run $10 to $13 with a price target of 15 and then 19. And you can see the 15 right here, 19 up here. These are cradle formations that just drop from space for whatever reason. It's always good to know, but typically earnings. Go sideways and then move higher. So not sure. These obviously have earnings coming up, but that chart is still looking very bullish. This Guardant Health has been stair-stepping, and liked this. It has stayed above the 55 and the 100-day. It's not looking very exciting, but I think it has potential. So Monday, January 13th, liked this. It has not broken out above this 84 really strongly, but it has all the looks of it wants to try. So it's a slow one to launch, but I think once it gets above and stays above this weekly trend line, has a good look. The options are not very exciting for me, so I got to tell you, that's not a high, recommended long on my list. But I want to see how it does above 84 because I can see how this can travel much higher. I just want to watch it for right now. This is also in the news of late. I like the setup. It is way, way young, so not enough data. But I like the growth story behind this one too. It's tough. I have no interest in trading it right now. I know that sounds weird, but I want to see what it does above $26. To me, if it can get and stay above 26, and it may need some time, then I will be very interested in this as a trend play. So here's IPO, the ETF. It has already reached, kind of a double top, and doesn't mean it can't go higher. I'm just noting that above 33.60 is very bullish. IQ and Hua are not really, they're China plays. Yes, there are IPOs, but they're so linked to China. And again, they're going to have their new year, so there won't be much activity. Typically, the Hang Seng and the Shanghai activity over there in their Asian market overnight will follow through to ours. And if their market's closed, then we're not going to have so much follow through. But these haven't done anything wrong. Oops. But I wanted to kind of put them out there as they're very constructive. They're above the IPO price, both of them. They're just not my go-to stocks. All right, LK is no question is a go-to stock because we've been absolutely above this. You know, the high of the IPO is a double bottom, is long. Then it reached, pulled back shallow. Then it broke out. It has 54% short interest, no joke. It has overtaken Starbucks in China. No surprise. I mean, the nationalism over there and the speed at which they can deploy and compete, especially on their own turf, there's no question that they're going to be, the largest in China because they're Chinese coffee company. The question is how quickly will the adoption of coffee be to the Chinese culture? And I mean, this is definitely a huge culture, a huge potential market, and they've got the numbers right now that are backing it up, and they have a bearish case against LK, but with 54% short, it's also just a highly oversold IPO that looked ripe to move higher, especially on short covering, and we had a ton of short covering in the past week, and LK was just a huge beneficiary of that. So from basically 25 to 50, this is completely doubled, and I think it's not done. I know, crazy, but I don't think it's done. All right, MDB and Okta, these are some cloud plays that look completely constructive. Obviously, they moved up to price target. They got rejected at the Bollinger Band and Keltner Channel, but they can get above there and definitely continue higher. But they were strong recommendations, and you can see where they got above the 10 and the 21. They moved very strongly up. Now they're digesting some price targets, but big picture, if this market really wants to rock and roll, I think these will continue with it. Along with Vive, which I actually haven't put on my list, but I think along with Vive, this is starting to break out. Very nice look for higher. On my alphabetic list here, I've got NEO. Strong recommendation before Christmas. When it closed above the 10 and the 21, we had then a big, huge 36% advance in one day, and I said that's actually extremely bullish. As long as it stays above, obviously, this 243, at the time it was 225, it needs to stay above this trend line. Right now, it has a gap, but it is strong. And I mentioned this on Monday, too. Even though it was down, it was on Monday on the 13th, I said this is not done because it had 9 million shares that came in. And the prior day, it had, in the morning, whenever I did that video, the live trading, and I went back and I looked at it, and I'm like, I was so bullish on this. Why? Because the prior day, it had a few 100,000 shares traded, and on that day, I happened to spy it live in the trading room. It had 9 million, and it was in the morning still. And sure enough, this popped higher, pulled back in a shallow way, and now it's moving on up. So NEO looks still very bullish, but very volatile. PD has yet to launch. It's sitting pretty, but it hasn't really done anything. In the same way that Work was kind of sitting pretty, but then Friday it got a little, reminder that it's way small and Microsoft is way big. I think I am definitely really excited how we did this pins because it was, for me, imagine that wasn't even there. I'm like, as soon as it gets above $20, this thing has a gap to fill, and it did in 1 week. 1, 2, 3, 4 days. So that is, by the way, a very bullish setup for higher. I don't think this is done, but it tagged exactly the 21 week, and it just kind of said, nope, we're going to hang out here for a little bit and digest. Still bullish pins, long story short. This PS is another one that looks like it is just starting, but I'm not so excited when you have, even though this is an inverse head and shoulder look, it isn't really. It's this left shoulder is lower, the right shoulder is lower. To me, this is not a perfect, it is a triple bottom, but it's not a perfect representation of an inverse head and shoulder. So I want to see what this is going to do. I have a hard time believing this is going to go like the others straight up, but it could. All right, we're getting off. I'm getting off. Peloton, it got above the trend line, but it hasn't really done anything very exciting. It could just as easily fall back down. Having said that, if we have more migration, rotation from momentum into these value and oversold plays, Peloton is 70% short float. Not as much as GME, by the way, just throw that out there, but I did just find and tweet, and I will obviously include this, but GME is 98% of the float is short. Like, that's, if it ever does turn around, it will explode. SIG was one like that. And we were actually spying this for a while because it had already gotten above the 10-21 week. It had come down and it was not breaking 1859 on a close, which was so cool. Then it had earnings and it was just, obviously elevated. It rose, I think, 32%. It still has a nice area here. It can move higher into 34 for sure. But this is the power of a short squeeze, no question. RVLV is another of these IPOs that broke IPO price. It's been coming up off the bottom. Now it's trying to get above the 10 and 21 week. Folks are starting to mention this. I'm not as excited about RVLV, I'll be perfectly honest. I'm not as excited about Peloton. I'm not as excited about PS. I was very excited about PINs and the Uber. Oh yeah, we're going to do Uber and Smile Direct. I was very excited about this as well. It gapped up. It pulled back. That was shallow. It gapped up again. That is the power of shorts covering, but it doesn't have enough information really, but it hasn't really even gotten extended here. Versus this RVLV, it's already popped up, this stochastic is quite elevated, but price isn't. So I'd rather have, honestly, this is slow to launch. So I'm thinking there might be some more energy in Smile Direct. And Uber, and then I mentioned 36 is just a magnet. This has been looking fabulous. I liked that Morningstar reversal. I liked how it got above the trend line with a gap. It stayed above the 10, had a shallow pullback, and then we were positioned actually for that. That was great. It exploded higher. It got into the 30 week, but it closed extremely well or strongly. Still like Uber, to about 37 before I think it starts to get pushed back. Zoom, same thing. It has a nice double bottom formation, kind of similar to Crowd, CRWD. You can see it's like double formation on a weekly. And you can see how this shot above the high of 60, and it's on its way north. Zoom looks like it's trying to do the same idea, get above 76. It got repelled because there's a 30 week sitting right here. Unlike Crowd, 30 week is way up here. So that's more of the target. But I do think this is very constructive above 76. And then last of the IPOs, ZS, again, fabulous. It was a Morningstar reversal, and then it just shot up very, very strongly through the 10, the 21 to the 30. Next week, opened up above its platform play that is, I think, going to get some attention over time. Right now, this is extended. Wouldn't be surprised if there's some choppiness between this 55 and 65. Again, so much of the market right now is just a look of, are we going to explode higher? Probably. That's my probability is probably 60% higher. And then we have a very sharp pullback, and it will happen in the next 30 days. And then, of course, just the other likelihood is we have consolidation. So lots of choppiness, but grinding higher is the way that it has been looking. So one of those two, euphoric and then a big drop, or we just kind of grind higher. And at some point, of course, we're going to have a rollover, but it's probably earnings. Okay, I think I did my job of basically following up on that public video that I did last Monday. Also, a review in detail for clients, which is to say that 2 months ago I saw a sector rotation theme into oversold IPO, cloud, unicorn, if you will, plays that had an opportunity for bouncing as well as short covering into this earnings season. Now, having said that, even though I spied that 2 months ago and traded it actively, supporting clients in my live trading room, and then did a public video last week, half an hour long with tons of setups, it did extremely well this week. And I will say that this video is done as far as this theme of IPOs. I might revisit it at a later time, but there are other areas, obviously, that I have addressed in more detail with clients, not just the IPO trades I still think are very good looking, but also the earnings plays that we're going to do, because I expect some to do report a positive EPS number. I think those cloud unicorn companies posting negative EPS numbers will be severely punished again, like they were in 2019. CrowdStrike and others didn't lose 50% of their stock price post IPO based on just impressive top line growth. They were disappointing on the negative EPS numbers. So I think investors want at least a 10% forward growth. Reasonable EV to sales ratio matters again, but more importantly, I'll look at that kind of setup with clients in the room and option strategies and such. For now, I just want to close because I have momentum trades to go over with clients, macro trades, pot stock trades that have been doing very well, and now a lot of attention has been focused on that. We have some good potential, if you will, for federal laws, and they're reviewing that this week. Other oversold value plays that rocked this January effect, and then my 2020 bottom fishing plays that I am absolutely excited about for this year. And of course, trades that didn't work. All that will be for clients. It'll be a very long video and detailed trade setups with low risk entry, price targets, which is basically stop and profit target. And I invite you into my live trading room. It is inclusive of morning detailed look at what's moving, why, and how to trade it, not to mention my occasional posts, of which they are inspired. In other words, I've got platinum and palladium that is still in play, IPOs that are still in play, oil and gas that are still in play, pot stocks that are still in play. So this is definitely worth a look. I invite you to come fishing with me. Have a great week.